VM Wealth Management. Your money moves forward, not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Professionally managed, driven by performance. Put your money in motion. VM Wealth Management. Transform your everyday. Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. With VM Wealth Management, your money moves forward, not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Professionally managed, driven by performance. Put your money in motion. VM Wealth Management. Transform your everyday. Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. VM Wealth Management. Your money moves forward with intention. Professionally managed, driven by performance. VM Wealth Management. Transform your everyday.
Good afternoon, ladies and gentlemen. Welcome to VM's Investor Briefing. My name is Romarius Sterling, Manager of the Capital Markets Unit, and I'll be your host for today's proceedings. Before I get into the presentation, just some housekeeping matters. I just want the viewers to know that the prospectus is available for your perusal. They can check it out on the VM Wealth website as well as the Jamaica Stock Exchange website. And it's very important that you review this prospectus before you make any investment decision. In addition to that, there will be a Q&A session which I will be moderating. The Q&A session will be at the end of the presentation. And as you ask the questions, I will field them to our panel. So with that out of the way, I'll get right into it. So on the panel with me today, we have three key leaders from VM to walk us through this presentation. I'll begin by introducing Mr. Reswert Burchinson, CEO of VM Investments Limited, Mr. Dwight Jackson, Assistant Vice President of the Capital Markets Unit, and Mr. Stuart Andrade, Assistant Vice President of Finance. As you can see, what we have planned for you today is a comprehensive presentation looking at VM's strategic direction and strategic initiatives, the financial performance, and some key details of the offer. We have a pretty comprehensive presentation planned for you today so that you're in a position to make an informed investment decision. So without further delay, I'll get right into it by beginning with our CEO, Mr. Reswert Burchinson, who will just give you a quick glance of VM's story, the group, how we've evolved over the years, and our strategic initiatives, as well as our key wins. So over to you, Rez.
Thank you, Mario. Good afternoon, everyone. Good afternoon, gentlemen. Thanks for supporting us as we execute on our VMIL bond. Click on. Thank you. Okay. So my task this afternoon is just to walk the listeners through the VM Group story and more specifically how VM Investments would have been performing over the years. We're going to touch on last year some key developments in the group, in the business, just to reiterate and invest in public, the strength of the group, and why we're undertaking this refinancing program at this point in time. So a bit about the group. The VM Group has been around for over 147 years. A number of Jamaicans would have grown up with the group, but we have made quite a bit of strides in the last couple of years. First of all, our range of products and services that would have expanded, and we are now steep into a digital transformation program because we want to serve our customers well, provide awesome customer experience, and also bring some efficiencies to the business. The VM Group was created between 2021 and 2022, and then the VM Financial Group came into being. And from that, we actually launched our real estate holdings and also took a larger stake in our associate company, BCIC. The some interesting developments over the last couple of years is that our remittance business went through a transformation just to be able to meet the needs of its investor base or its client base, and of course that based on the fact that we're a global enterprise, we're expanding more in our diaspora markets to meet the needs of customers there. So outside of our 16 branches within VMBS, there's also this is VMBS now would have locations in New York, Florida, United Kingdom. VM Investments would have bought a business in Barbados. BCIC is also throughout the Caribbean, in Turks and Caicos and in Trinidad, and Barbados, sorry. And then Caroline also has tentacles in Trinidad. So as you can see, we are building out a global enterprise. Just want to reiterate that the VM Financial Group got rated by CARICRIS this year. We're very proud of the ratings. Some very compelling supporting factors: leading building society, strong asset quality, robust governance, profitable operations, good liquidity, and one thing that we always have to remind ourselves in terms of the capitalization of the business, primarily those relating to regulator compliance. This chart shows, won't spend much time on it, but it kind of shows the growth in the asset base of the financial group, over the past 3 years. There is a much stronger focus in terms of off-balance sheet assets. It makes the business much more capital light, and capitalization is important for the business. So, as we go, and obviously I'm going to talk about it when I talk about VMIL, that VMIL will also have to play a role, and has played a role, in terms of growing the off-balance sheet assets within the VM Financial Group. Let's talk a bit about VM Investments Limited. We're listed on the Jamaica Stock Exchange, listed, rated, regulated. We have a vision to be certainly the premier Caribbean-based investment company, creating and preserving wealth for our clients globally, whether it be in VM Financial, in the VM Wealth Management, or VM Wealth Funds Barbados. And we have some core values that we live every day. Want to be member focused or customer focused, integrity at all times. We all know that the vision and the mission that we have set for this organization can't be achieved by one person, must be achieved by teamwork. And teamwork could be expanded much broader to speak about all stakeholders. Certainly want to bring innovation to the local and the regional Caribbean space. We've been doing some of that in terms of some of the things that we're doing in VMIL and in VMBS and some of the other subsidiaries, and always to aim for excellence in all we do. So these are some of the core values that drive us in our endeavors. Where is VM Investments Limited situated within the wider VM Group? You have the VM Group, you have the VM Financial Group. VMIL is listed. Then we have some key subsidiaries. First, wholly owned is our broker-dealer, VM Wealth Management Limited. We do have a subsidiary in Barbados called VM Wealth Funds. And then we have Kingston Properties Limited, which is also listed, a key real estate platform for us. That's doing very well, also expanding globally. A large part of their total assets is now resident in the United Kingdom. And then we have some private equity investments. We have Home Choice, for which we're very proud. Coalbush doing well as a part of our PE play. And then we all know that we have a stake in a fund called Jasmith, just to bring private equity to the local space. Won't get much into a board of directors. Why? The prospectus does provide detail on the board. And the board is chaired by Michael Morris, and we have Courtney, Milton, myself, Noel, and Sandra. One thing I would say about the board is that when you look at the competence of the board and what is required to drive this business, whether it be M&A, whether it be finance, whether it be strategy, whether it be innovation, I believe some key competencies are at the board level to help drive the business forward. Other directors, Vikram, who is the COO of ICD Group, Noel, Dennis Cohen, former banker, Frederick is the group CFO, Maria Robinson is from Barbados. I'm glad to have her on board. And our newest minted director is Ensom Ricketts, formerly of EY fame. Again, we'll get into the detail of the team with the board on my team, but I lead this awesome team supported by Alison, COO, just brought on board Dr. Karian Hepburn, Malcolm, VP of Revenue Distribution and Wealth Strategy. Karian's primary mandate is to grow the revenue base in what is a very tough market, but we believe that we have a team to execute on the same. Sean is our country manager in Barbados. You're going to hear Dwight speak just now. Yvette is our AVP in Treasury Operations. You're going to hear Stuart speak. Denise runs global trading. We have Tara Smith, who is in charge of Treasury, Asset Management and Structured Products. And then we have Bob Russell, who runs our Asset Management team. So this is a team that has been executing on the strategy of VM Investments. Deep expertise in key areas that we believe will drive this business forward. So this is the team that will represent us going forward. What are some of the moments that mattered to us last year? One key one is the fact that our corporate governance index score from the Jamaica Stock Exchange, we achieved a AA rating. We have worked on this for quite a bit, and corporate governance is very important, especially in financial services, because trust, transparency is the order of the day. We got up some awards from the JC in terms of best practices, and I think the investment community is aware that we have a CARICRIS rating. We're rated investment grade. Some other key developments in terms of the overall business. This business is a business that generates consolidated revenues of about $2.3 billion. Net PAT last year, and Stuart will expand more on same, was closer to $200 million. There was if you normalize the 2024 numbers to the 2025, you see an underlying growth of about 24%. And of course, our capitalization, something that we can't stress too often, or must stress as often as possible, is that our capitalization certainly does exceed the minimum set by the regulator, the Financial Service Commission. Other moments that matter for this business in terms of some key business drivers, our Barbados subsidiary got our investment advisor license. Why is that important? You know, we're all about growing the business. We're all about revenue growth. So our investment advisor license will allow us to drive the revenue growth and offer more products and services to the people of Barbados. Our constant stream portfolio was also launched. It's like a fixed enough fund. Why is it we launched it? Because we got feedback from clients that this was what was needed. Low risk, low liquidity fund, a very interesting portfolio for those seeking decent rates of return, but in a very liquid portfolio. That's on the asset management side. Treasury, so some wins were certainly the expansion in the net interest income of the business by 23%. On the capital market side, there's some very large transaction that we did. The largest one we did was for 1.6, but overall we financed projects or deals valued at close to 9 billion Jamaican dollars. And certainly this is a growth area for us. How can we play a greater role in providing capital for Jamaican businesses, for them to grow, expand, hire people, pay more taxes, and contribute to the overall growth of the region? And then in our global business, I'm very proud of this transaction. We did, I think it was the largest or the second largest transaction for 2025, with a transaction valued at $2 billion on the Jamaica Stock Exchange. So earlier, when I was speaking to the core values of the business, we also spoke about innovation. So what are we doing in the space? First of all, we launched our IPO platform. So investors would recall years ago applying for an IPO, you had to stand in a line with forms. That's no longer the case. Persons anywhere on the globe can subscribe to any of our offerings, including this offer, in a total digital manner. Equity transactions, debt transactions, bring some efficiency and innovation to the space. Last year, we actually upgraded our core banking system, Finastro, to make it more compliant and to give us the ability to offer more products and services to our clients. And then very proud of this for the fact that clients across the globe can now become clients of VM Wealth Management Limited because we now have a digital onboarding platform. Key you in for the business. All these things that we're doing is to improve the competitiveness of this business, but more importantly, to ensure that we serve our clients well. I'll now hand over at this point in time to Stuart, who will take us through some of the numbers.
Good afternoon, ladies and gentlemen. My responsibility is to carry through 2025, the year 2025, as well as Q1. I just want to note that the numbers being reported are in the context of the environment in which we operate, which is very challenging as we speak, tough in terms of economics, tough in terms of both the local and global equity markets. Interest rates are high, and somewhat we're seeing some challenges as that relates to in terms of raises in the capital market space. So how did we do in 2025? We actually started off the year with 2 consecutive quarters of losses. Team actually huddled together, and we actually finished the year strong, reporting a profit of net profits of $166 million. This comprised of our NII, which was up 23% year over year. Our consolidated revenues were actually up also 11% year over year. Total operating costs were actually up 3.7%, but it's actually below the inflationary rate of 4.3%, annual inflationary rate of 4.3%. And to top it off, our share of profit was $151 million. So as it relates to that, our interest in Cape Reed was affected by the fact that they had a write-down in one of their investment properties abroad. So overall, it was a tough environment, as I said before, but 2025 we actually pulled through and reported a net profit of $166 million. Our total assets under management was ended the year at $126 billion. That's up 2.2%. Capital adequacy ratio, Red spoke to this already, and our investment securities actually rose by 27%. So we're very, very encouraged by the numbers, given the fact that we closed the year with 2 consecutive quarters of profits. How did this comprise? Our audited financial or the fiscal performance historically. As you can see here, Treasury was the one who actually led the income in terms of 38%, followed by corporate finance and then asset management. In terms of the composition of our revenue, of other operating revenues, so gains from investment activities would have led the charge, followed by fees and commission. And on the other operating expenses, the staff costs, and we believe in our people. We actually believe that this is a knowledge business, and it's very important for us to actually get it right. So this is something that we believe, which is actually seeing an increase right here. And as it relates to other expenses, other operating costs is basically on par with prior year, and we showed a reduction in impairment losses. In terms of the balance sheet, we've seen significant growth year on year, with 2025 showing the highest increase. So that is something that we're relatively very proud of, as you can see, and that actually contributed to the total assets under management. Or covenants monitoring. So in 2020, you'd have seen that our debt to equity was actually around 0.8 times. Fast forward 6 years, and we're at 1.5 times, and we do believe that we'll be able to maintain and meet within the category of the 5 times ratio that is within the mandate. Our Q1 performance, the financial highlights. So I said we had 2 consecutive quarters in 2025. So 2026 would have met the 3rd. And we really went out the block, started strong in terms of the 2026 performance. Year on year, last year we had Q1 2025, we had a loss of $32.5 million. We actually have a profit of $70.1 million. Our operating revenue is actually up 17%. And our total assets, again, despite being up significantly 2025 versus 2024, is up again by 15%. So we're seeing significant growth and promise there as relates to the financial performance, continuing from what we saw in 2025. Some of the key transactions, we had $10.6 billion of capital market transactions. This is from the VMFG preference share raise, and this was oversubscribed by 25%. Our tropical battery transaction, this is one of the first that we've done. Sale and leaseback, I'm very proud of it because it's the first of many. The capital markets team has actually promised me more of these. So we're supposed to, that was valued at about 1.068 billion. K-Preet bond raise was oversubscribed. That's actually 643, was oversubscribed by 33%. So like us, our investors actually believe in K-Preet. VM Property Fund syndicated loan was oversubscribed by 36%, and that was approximately $1.57 billion. Our client experience, 56.35 as it relates to the overall channel migration, 100% in Wealth Fund IPO Edge. This is the percentage of transactions submitted digitally, and we're very proud of this. And what this does is that it reduces the amount of work that we'd have to do in terms of to get things right, and also improve the customer service to our clients. 26% clients onboarded. We spoke about this, and 249% increase in terms of CMS transactions. This is we're very, very proud of this. Again, this is a step in the right direction. Some of the awards that we had in Q1, our own Resworth Burchinson had the CEO ranked #1 business suits by the Caribbean Power 100 and Power 50 in Jamaica. We had 3 times Silver Addy Awards. This is Caribbean Advertising Awards, and this was for investment vehicles campaign. As it relates to our financial position, again, total assets, we said that it increased by 15%. The revenue composition, this is one thing that we're very proud of. In terms of the financial performance, revenue is actually up against prior year, and expenses is actually down against prior year. So this is something that you can see that what has contributed to our net profit overall. Revenue composition, 2025 versus 2026, as you can see, the gains on investments activities is actually a driving force, followed by the fees and commission. And I'll hand over back to Riz.
Yeah. Thank you very much, Stuart. My job is now to kind of close and to frame the strategy for VMIL and its subsidiaries for the next couple of years. And what we're working on, as Stuart spoke about before, is that we're listed, we're rated, we're regulated. Certainly, we believe that despite the challenges of the last couple of years, that we're responsible to grow revenues and grow revenues profitably. Where is that going to come from? We have said repeatedly at our AGM, numerous press releases, that there is a space to reimagine asset management. We are currently doing unit trusts, private portfolio management, and mutual funds in the space, but there are some other opportunities which we believe that we can leverage our asset management competence to not only contribute to the development of the region, but to put this business on a more resilient footing. Next pillar is going to ensure that we're driving efficiency and transformation. What does that look like? Earlier in my presentation, I spoke about the digital transformation. We have some exciting opportunities in front of us. What I mean by that, we have a client portal that we believe that as we continue the upgrade of that portal, we'll be able to offer our clients a lot more products and services and convenience, bringing ease of doing business with us, but also improving our client experience. And then, how do we then wrap this to create a competitive edge in what we do? What are some of the things that we're working on? How do we, look at our clients across various segments and be able to offer products and services that are competitive, that are compelling, that can drive this business. As we build that competitive advantage, what are some of the opportunities across the region? There are some opportunities in the Southern Caribbean, which we have said before that our Barbados hub will play a role in exploiting those opportunities. And then wrapped in all of that is ensuring that our operations, our controls, our risk framework and our governance framework, that they work and they work well. So, as we put this offer today to the public, I know on this call that there are likely to be shareholders that heard some of this at the annual general meeting, but these are some of the things that we'll be working on to build the resilience of the business, to drive the growth of the business across the Caribbean, and to also ensure that we are contributing to the countries in which we operate, whether it be Jamaica, whether it be Barbados, and any other country in which we eventually land. So at this point in time, having kind of shared the overview of the business, we spoke about the VM group and its history and how it has grown to a household name, and the governance around the VM group and some awesome things being done in the group. We spoke about VMIL, VM Wealth, what are we doing in terms of digital transformation, asset management, building a much more diversified business, the platforms in which you operate, whether it be KP REIT, whether it be Home Choice, and then we are now closing in terms of speaking about that investors, as they look at the opportunity, to be assured that the strategy that we're employing will continue to ensure that we are building a resilient business. So at this point in time, I want to hand back to Romario, and we can open up for questions.
All right, thank you for that, Rez. As you can see, a very comprehensive presentation. We would have walked you through the historical performance of the business, the strategic initiatives that will be executed for growth, and now we are going to get into the details about the investment opportunity itself. So at this point, I will hand over to Mr. Dwight Jackson, the AVP for the Capital Markets Unit, who will pretty much just walk you through the details of the offer and why you should consider it as an investment option.
Thank you very much, Romario, and good afternoon to our viewers online. Welcome. As Romario noted, I'll be taking you through the offer, why you should invest. As we articulated earlier, while this has been a tough and challenging environment, what we've developed are the muscles needed to cope, and we've built an enduringly profitable business. For our track record goes back well over 5 years and longer in terms of our ability to maintain a position in the black. And that's down to the team that we've built and continue to build. As our finance lead spoke, Stuart said, we're building a business that is built on capabilities. And those capabilities have helped us, as I said, to maintain, even in this difficult environment, a very enduringly profitable business. So robustly built to endure these challenging times. And as such, we bring you an offer from such a business that we think, relatively speaking, is attractively priced for the risk that we're asking you to take. I just want to touch a little bit on some of the capital markets. We've been not only supporting the VM group in terms of its preferential raise that was successfully closed earlier this year. We've been supporting other businesses. Recently, we did that with Tropical Battery and their sale and leaseback. We've done it with a number of players that are listed on the stock exchange, even some of our competitors in the financial space. We continue to play a supporting role in ensuring that capital reach the businesses and the what I would say the small, medium enterprise size businesses that need said capital to grow and expand, to compete, to become more efficient, as we all play a role in contributing to the advancement of Jamaica, especially coming out of Hurricane Melissa. So what does this offer entails? As noted before, we're seeking to raise up to $4 billion via 2 tranches. So effectively $2 billion per tranche. We have a 25-month facility and a 43-month facility, priced effectively at 9% and 9.5% respectively. The proceeds will be used primarily to refinance those maturities that are coming up at the end of this month, as well as in December. So for the most part, the raise is not expected to increase our debt position, as our finance lead Stuart noted that, our covenants of 5 times will be maintained. We anticipate that based on the trajectory that we're on, right now the covenant outturn is of debt to equity is about 1.5 times, and we expect to continue on that path or that downward trajectory. These facilities are interest only, meaning that investors who invest in them will get interest paid on their principal quarterly, and the principals will be paid at maturity. The offer opens on June 17 and closes on July 17. However, we do reserve the right to close early, and based on how things are shaping up and we love the support we've been getting, we anticipate this could happen at the end of June. So we are encouraging those persons who, as our moderator noted, have an interest in participating, whether you're a new investor or an existing investor, to get those applications into us before the end of June to be on the safe side. So what are some of the deal merits? We mentioned that the VM Group has been around approximately 148 years. This is an institution that has stood the test of times, and some of us know some of those times. Those times include the FinSoc crisis. Those times include the 2008 debt crisis. And recently, we had crises of COVID, we've had oil shocks, we've had so many of them in Hurricane Melissa. But I share all of that to say that the VM Group has withstood all of that, and as a result, VMIL, being part of that group, has inherited those genes that allows us effectively to build a business that is resilient and can withstand all of these times. We've built a business that is not only capable of withstanding past shocks, but also, future-proof it against what we expect to be more frequent shocks to come, based on the fact that we're living in an increasingly global environment. We have a very robust credit profile, a very strong balance sheet, and today we're here to sort of present to you the offer as part of our strategic plan to maintain our robust balance sheet going forward, at least for the next 25 months. Our solvency ratios are very good. I think our AVP Finance Stewart presented that our capital adequacy ratio for VM Wealth Management Limited is in excess of 15%, well above the regulatory minimum set by the Financial Services Commission. I spoke to our enduringly profitable business. Several businesses have experienced significant challenges during these times as a result of, poor performance in the stock market, poor performance as a result of fixed income based on high interest rate costs. But we've been able to overcome all of those challenges to maintain a profitable business in spite of all of that. I mentioned, of course, that we have strong corporate governance. You look at our board, very diverse, very experienced, brings a wealth of experience in a number of areas that supports the revenue generation aspect of the business. So both in terms of mergers and acquisition, as our CEO mentioned, deal origination, our fixed income and treasury business, or growing asset management business and some of the new and exciting products to come out of that, as well as our sales business and just overall business development. This bond raise will certainly continue to improve our liquidity position so we can support the needs of our investors and clients. And as I mentioned before, our balance sheet will benefit, and you, the investors, will certainly benefit. You would have participated in the VMFG raise. That closed successfully. We were well over 2 billion oversubscribed. As a result, we expect the same here, and it means that if that happens, VMIL and VMFG will be out of the market for at least another 24 months. So, of course, it's an opportunity for persons to get in on a solid business, as I said, which has withstood the test of times that have come at us. And we anticipate that, as I said, as we've built a very robust business, whatever is to come in the future, we will withstand it, and we'll come out on the other side. So these are some of the deal merits we've captured. Of course, this list is not exhaustive, but of course, in the question and answer section, if you have further questions, I will share more of why you are supposed to invest in this opportunity. As an investment outfit, we face different type of risks, credit risks. We're exposed to that. Some of the mitigants we have in place, our debt security exposure is capped at 20% per issuer. We have substantial investment in short-term GOJ securities, and we have daily monitoring of our loan portfolios. Another risk that we face is, of course, market risks based on our activities. Mitigant that we take on to sort of make sure that we manage this effectively is matching foreign currency liabilities with assets to close that gap, periodic stress testing and duration analysis, and we also maintain a very diversified revenue structure to make sure that we can withstand shock to any one of those revenue lines as may occur from time to time. Competition is also part of what we face. We mitigate this by making sure that we have attractively priced securities despite a challenging environment in terms of interest rate reduction. We monitor our market rates to make sure that we are, competing based on the value of the product and services that we offer. So our shareholders or stakeholders get value for money. Cash flow is also another risk that we face as a business, and we manage this through making sure that we have high default rate incentives to prioritize our facilities in terms of being seen in the waterfall of payments. Of course, we don't need this, but should we need it, we have the support of our parent, the VM Financial Group. And I said we don't need it because CARICRIS has awarded us our own investment grade rating to show that we are, doing very well on this front and maintaining an excellent business in terms of credit profile and a very strong balance sheet. Some of the advisors to the offer, of course, as I mentioned, we serve as the arranger and broker. Of course, in addition to that, we have Patterson Mayer Hamilton as our attorneys at law. And for this particular offer, we've engaged the services of MFNG as trustee and registrar. So for investors, based on what I've said, based on what our CEO said, based on our AVP of Finance said, if you think at the end of the day that our story is compelling, as we believe it is, you are encouraged to read the prospectus, speak to your financial advisor, and having done that, log on to VM Wealth, vmwealth.myvmgroup.com/IPO. That is our VM Wealth Edge platform. You can go there, you can read the prospectus again if you have not been able to find it on the JC website. You can apply by putting in the information that you're prompted to, which includes your TRN, your date of birth, your JCSD number, a valid government-issued ID. If you don't have any of these, you are, of course, able to go and create said account by speaking to a VM Wealth advisor to assist you with getting a JCSD number, etc., so that you can go on the platform and apply to participate. Just some final reminders. The offer closes on July 17, but as I've noted that the issuer, which is VMIL, reserved the right to close early. We expect the bonds will be listed on the stock exchange in August, and we expect to successfully raise the $4 billion that we are seeking from the public. The minimum subscription for existing investors is $10,000. For new investors, we're asking a minimum participation of $100,000 to get into the offer. How to apply? Again, you can scan the QR code on the screen, or you can visit the Jamaica Stock Exchange website to view the prospectus. And as I said, you can type in VM Wealth IPO Edge on Google, and you should be able to find a link to take you to where you can apply for this offer.
All right. Thank you for that, Dwight. And thank you to the rest of the panel for a very comprehensive presentation. So there you have it. As you can see, this is a great investment opportunity, and it is proven by the performance of VMIL. It is proven by our track record. We've been very consistent in terms of paying investors' interest on time. We've never had a default in our history. We have a strong brand equity supported by one of the oldest financial groups in the country. We have a very diverse strategy, and we also have diverse revenues. And based on everything that has been presented before you, I think enough has been said in terms of why you should consider this investment option for your portfolio. So with that said, I'll head into the Q&A section where we'll take questions from our viewers, and just please remember to put your questions in the chat. I'll read them and then we'll give you the answers. All right, so the first question, why a public bond offer as opposed to just a private placement?
I'll take that one, Romar. So we decided to go the route of a public bond offer in line with the last time we were able to tap the market successfully, which was December 2024, where we raised about $5.6 billion. If you recall, or if you don't, we did that as an initial public offering. So that was the first time we did IPO of bond offering. And the rationale then was that we wanted to expand to the average investor to participate. We wanted to open up the doors to them. VM is who it is today as a group because of the average person who decided that they wanted to buy a home, started out this business with a group of clergymen. And so we wanted to be able to tap back into that aspect of our business as to what we are and why we do what we do. We wanted to give the average person an opportunity to start to build wealth so that we can continue our mandate of transforming lives. So the public offer was the opportunity for us to allow the average investor to get in. If it was a private, the limitations of that would have prevented the average investor from participating in the raise. And as such, we decided to go the route of a public offer. This time around, as I said, after this, we'll be out of the market for at least another 24 months. And of course, again, we wanted to make sure that the average investor who have $100,000 and want to earn an attractive return on that can do so. They don't need to have $1 million or $10 million to participate. So that's the rationale for doing an IPO, because we wanted to allow the average investor to be able to participate.
All right, thank you for that response, Dwight. And then we have another question. This question is, VMIL has included a 20% upsize option to raise the total aggregate principal up to $4.8 billion. What will the additional capital raised be used to do if the upsize is triggered? So this question, I can
I can take
The
it.
Rez, you
Can
can
take
take
it.
it.
Sure, sure, sure. Thanks again. Thanks for the question. Love the question. Love the fact that persons are engaged. So I had spoken earlier about the strategy of the organization in terms of the asset management space. But Stuart also spoke about the various business lines, whether the capital markets, treasury, or trading. There are lots of opportunities that are in front of us on the asset management side, whether it be we have some opportunities on the private equity side. So, we have a framework in the organization in terms of the products to which we deploy capital, highest ROI, the various risk mitigants. So if we are successful in getting 4.8, that would be really awesome. There are some projects that we really would deploy same to for execution in the next couple of years. There's some really interesting opportunities that we are about to roll out on the asset management platform. Certainly, I see from just thinking about it as an opportunity to deploy some of that capital to some of those opportunities. And certainly when we publicize those opportunities or those projects that we plan to execute, and I think the investing public will be quite excited about them.
Okay, thank you for that, Rez. So there you have it. Apart from the fact that we'll be refinancing debt, some of the capital will go towards expansion, which is what the investor wants. You want to invest in a business that is going to continue to grow and a business that is, improving the arsenal or getting that resource that they need to really execute the growth strategies. The next question that I'm seeing on the screen is, since the stated intent of this bond really is strictly debt refinancing and the settlement of transaction costs, to what degree will this extended maturity profile lower immediate annual debt service costs? And how will the freed up operational cash flow be utilized within the 2026 to 2027 financial years? So this question, I think, Dwight, you can take this question.
Yeah, well, certainly. So if you look at the debt that is being paid out at the end of June as well as end of December, so we're moving from 10.5% and effectively 10% down to 9.5% and 9%. So we're talking about a roughly 100 basis points reduction in terms of the cost of debt. So that, on a $4 billion debt, we're talking about roughly, what is that, Riz? 40 million a year in savings. So that is how much it's going to result in terms of reduction in terms of our cost of debt. And that $40 million, as we point out, there are a number of different initiatives that are being pursued. Part of our mandate is to really grow our asset management business. As our CEO noted, we have some exciting products there. Some of it will require some equity participation. And so we'll be looking to see how VMIL supports those asset management products that are going to be unveiled in the next coming months. But outside of that, we have also other need for capital. We're talking about difficult times in terms of the current market space, but also very interesting times, and a lot of opportunities are presenting themselves both locally, regionally, and internationally. So having dry powder is very good for the business as we try to make sure we take advantage of all opportunities as they present themselves to continue to build an enduringly profitable business.
All right, thank you for that, Dwight. So, as Dwight would have stated, the interest expense will also be lower because we're actually refinancing this debt at a lower cost. So in addition to the fact that there will be some capital for expansion, we're also reducing costs. Again, that will be accretive to you as an investor and shareholders in the business. So this transaction has a comprehensive benefit to the business in the sense that there's expansion and there's also a reduction in interest expense or overall cost to the business. Another question that I'm seeing is, with interest expense remaining high and your profitability being inconsistent when there are no one-off gains, what assurances can you give investors that the debt is manageable long term? So this question, I believe I can hand it over to Rez.
Sure. I'll take it. Again, very good question. I just want to step back just to highlight how we manage the business. I may get into some technicalities, so forgive me. But in VMIL, we have a scholar, and across the VM group, enterprise risk management framework. that kind of guides how we manage the business, the risks that we take, and for the risk that we take on how we manage these undertakings. So the person have said, first of all, is the debt manageable? Number one, you'd have seen in Stuart's presentation that our debt ratios have been falling for a number of years. That's certainly deliberate. Secondly, in spite of the challenges of the last couple of years, we have never missed an interest payment, and we have continued to receive very good ratings from Caricus. Also want to reiterate for transparency that we're listed, so investors can certainly see our progress from quarter to quarter. We have AGMs, we have investor briefings. Person can always, track how we're managing this business. We believe that the debt that we are undertaking, we're not upsizing the debt per se. We are refinancing $4 billion, and that would have adequately serviced those obligations for the last couple of years. And then something that I spoke about at the AGM is that we are certainly engaging on many projects to build greater efficiency to the business. Whether it be, how can we, improve the efficiency, drive down some of the cost structures, etc. And really see more about it. Stuart spoke about the Q1 numbers, where where Stuart kind of held a cost containment. Lots more initiatives like those are in train. And then lastly, just want to highlight that, how we're building this business, as we have said before, is we're building an asset management platform, whether it be real estate, whether it be PE, whether it be the typical asset management structures or others. Why is that important? Because the asset management flows are recurring flows. You earn them in your sleep. That builds a more resilient business. So as we move away from one-off opportunities, and don't get me wrong, if we see one-off opportunities, we're going to capitalize on it. And that's our mandate as fiduciaries of this business. But again, I believe that we are managing the business well to ensure that the debt is manageable long term.
And just to add to Rez's point as well, if you follow VM's trajectory, you'll see our cost of funds have actually been reducing consistently, and the reason why we're able to achieve that is because we've been reducing the rates at which we borrow, and that is as a result of investors' confidence in the business, as well as, some amount of improvement in the interest rate environment, though it remains elevated. So that has also contributed to our ability to adequately cover the interest expense. And you would have also spoken to the consistency in terms of revenues, which is, I know, a key part of the question that was asked, that is expected to come from our asset management strategy, as well as other fee and commission income strategy. Another question I'm seeing is the bond includes a financial covenant capping the consolidated debt to equity ratio at 5 times, excluding repurchase agreement. Where does this ratio currently stand as of the latest practicable date? And what is the internal target limit to ensure an adequate buffer against economic shocks? I believe I can hand this question over to Dwight or Stuart, whoever wants to take it.
Yeah. So, no problem, Ramar. So currently the ratio stands around 1.5 times, I think Stuart reported on earlier. And this would have peaked, I think, back in 2022 at 3 times.
Correct.
So it has been on a downward trajectory since. And if you look at this ratio, it's debt to equity. So as our equity base grows, this ratio also declines over time. And the expectation is that the business that we're building, as I said, a business that has been, despite the difficulty of the markets that we operate in, has been profitable. And so our equity base should continue to grow. We are not looking to expand the debt. So over the period of time that this debt will be on our books, we expect this ratio to continue to improve. So in terms of internal targets, this is well within our stress test in terms of acceptable debt to equity ratio. We have never really come close to the 5 times that we've set. And as I mentioned, we're currently at 1.5 times. And we expect that, as I said, with our equity base to grow over the next 12 to 24 months, this ratio to be further on the downward trajectory in terms of probably going below 1.5 times.
All right, thank you for that, Dwight. I think you adequately covered that question. Just checking to see if there are any other questions. So I'm seeing one more. So both tranche A, 9%, and tranche B, 9.5% carry fixed coupon rates. Given ongoing inflationary pressures and potential adjustments to the BOJ's policy rates, how does management plan to manage asset liability mismatches if local interest rate experience further upward shift?
That's me too?
Yeah.
All right, so I'll take a stab at it by saying that part of managing the mismatch that I am assuming is being mentioned here is the fact that these rates are fixed, so upward adjustments in policy rates, we should naturally be hedged against that, seeing that the rates will be fixed at least for the next 25 months, which is the shortest tenured facility being offered. The other is for 43 months. So with that said, should there be any upward rate adjustment, the business will be protected. Beyond that, in terms of facing maturities and dealing with a higher interest rate environment, we've actually experienced that in the past, and we would have weathered that based on our performance. We've learned quite a bit of lessons, which would allow us to actually continue to do well in such an environment. However, we do anticipate that while that scenario is very possible and a plausible scenario to start plan for, we are also able to plan for a scenario where interest rate we are currently playing in terms of what is happening. We are currently playing in terms of what is happening, and we see the opportunity or see space for the central bank to continue to ease in terms of rate reduction. So with that said, in terms of the asset liability match, we expect that if rates go up, we'll be naturally hedged based on the fixed rate position that we will be maintaining for these notes. However, if interest rates go down, there's always the opportunity for us to refinance to take advantage of the lower rates, as the bonds have the feature within them that allows us, the issuer, to call them and refinance them to take advantage of that opportunity if it materializes.
All right, thank you for that, Dwight. The next question that I'm seeing on the screen is, VM Wealth maintains active long trading positions in fixed income and equity securities that are vulnerable to market fluctuations. Given recent volatility in the Jamaican equity market, what hedging strategies are being deployed to minimize mark-to-market losses on the proprietary trading desk? I'm going to hand this one over to Rez.
Sure, I'll take it. Again, another good question. So we understand the volatility. I think Stuart spoke about it before, of the local investment space, and I think we have navigated it very well. Kudos to the team, kudos to the group. I would say that before you get to hedging, it takes me back to risk management and our risk management framework. And the risk management framework is not only for our equity portfolio, so our portfolios, and it also relates to or bonds or unit trust investments of our overall investment framework. I don't know of any active hedging products available in the local market. But what I would say, though, is that I believe that we have a very robust ERM framework that's managed by the group risk and our risk managers, and our equity allocation, whether it be in Jamaican or US markets, those are monitored on a daily basis. One strategy that certainly anybody would deploy is that we look at the total asset base of the organization. What percentage of the asset base is certainly in JA equities or US equities, considering the volatility that the person has described. And I believe that how we have crafted our investment policy certainly gives us comfort in terms of how we're managing that risk.
Okay, thank you for that, Rez. Our next question I'm seeing here is,
The credit rating agency Caricris recently commended VMIL on advancing its digital ecosystem to offer financial advisory services and independent transaction execution. What are the total capital expenditure expectation for this build-out over the next 18 months? And what is the projected timeline for achieving full cost efficiency? I believe this one
Stuart,
also,
I think that's Stuart question.
That's a Stuart question.
That's Stuart question. I put him in a hot seat.
Okay.
So I do believe that in terms of the cost efficiencies that we're going to be seeing, you should be able to see them over the next, I would say, 24 to 36 months. A lot of capital investments have actually started prior. And so over the next 2, even 18 months, you'd see approximately between $50 to $150 million being spent where these are, and there's a possibility based on the things that based on the projects that we see coming on board, that there may be an additional. So between $50 to $200 million in terms of capital investments. That sort of cost efficiency, again, you'd see it over time, but I should say that it should begin. We should begin to start seeing it within 24 months, and then thereafter you'd see some of the developments. But again, some of the exercise that we're doing in terms of cost efficiency has already started. Late last year, going into this year, again, those things are a continuous thing that we're working on.
Yeah.
So you'd have seen it in Q1, in our Q1 results in terms of some of the efficiency exercises that we did.
Yeah, and Stuart is the best person to ask that question, to answer the question of Mario, because let me just tell the investing public that Stuart is the one that always asking what's the benefits realization and the ROI on some of these investment opportunities. So I'm glad to hear that Stuart is actually in the corner of spending.
Agreed. Agreed. So we're at the end of the briefing and the questions and the Q&A segment, and I just want to thank the investment public for tuning in and listening to us on this investment opportunity. We hope that it was informative. We hope that we've addressed all your questions or whatever concerns you might have. If you have any additional questions or concerns, feel free to reach out to us via a wealth advisor, or send the questions on any of the VM investments pages, our VMWell pages. We're on YouTube, we're on Instagram, we're on LinkedIn, we're on Facebook. Feel free to ask your questions there. We will respond to those questions. In addition to that, I just want to thank our panelists today for a very comprehensive presentation. It was quite informative, and I'm sure the public is now adequately armed with the information that they need to make a prudent investment decision. Before we leave, I just want to remind the viewers that the transaction is available on IPO Edge. You can access it either on the VMIL page or VMWell page, as well as on our social media pages. Remember, the application is strictly online. There's also a QR code here, and there are QR codes on some of our digital posts on our social media pages that will take you to the application portal. So with that said, before I end the proceedings, I'm just going to ask Rez for any final comment, messaging to the public.
Sure.
Anything you want to say to them?
Yes, thank you. First of all, thanks the gentleman. Thank you, Mario. I think we'd have spent the last 90 minutes talking about the opportunity. I think we first started, or let me say again, by talking about the strength of the group, the growth of VMIL, the transparency of VMIL, what we're trying to build. This offer, as I said before in the deal merits, it's a refinancing, it's not new debt. And that would have shown the investing public that we've been good stewards of their capital that we're using to grow the business. And I would say to persons who are looking at the opportunity, take a look at the prospectus, speak to your financial advisor, speak to your tax advisor. But we believe, as we have all said and all concluded, that it's a very good opportunity for persons looking to invest in an attractively priced fixed income opportunity for the medium term. So I'd encourage persons to go ahead, give us a call, give the wealth advisor a call. I'm willing to have a conversation to see how we can participate in this compelling offer that we have in the marketplace.
Bullish. All right. Thank you for that, Rez. And again, thank you to the viewers. Over and out.
Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. With VMW, VM Wealth Management, your money moves forward. Not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Professionally managed, driven by performance. Put your money in motion. VM Wealth Management. Transform your everyday. Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. VM Wealth Management. Your money moves forward with intention. Professionally managed, driven by performance. VM Wealth Management. Transform your everyday.